Okay, I just want to start off by saying all time frames are the same as price is fractal. So it doesn't matter what it looks like on the H4, on the H1, on the 5 minute or the 10 second, it will all look the same. So whether you want to be a swing trader, a day trader, a scalper, it does not matter. It's all the same. And yes, it's the same for Forex, futures, whatever. To you, I'll show the same model happening on every single time frame. So we'll start here with, as we can see, we are on the 4-hour chart. Just want to see a break of structure, which we have here. This is a nice bullish break of structure. Now I want to see the demand responsible for breaking structure. We can see this is the demand responsible for taking out this high. Now on the way down, I need liquidity to be built. We can see all these lows being taken out. This is liquidity being built on the way to our demand zone. We also have liquidity within our demand zone. So then as price comes lower, I just enter in here, stop loss below, and of course I just target the high, expecting price to continue to make higher highs and higher lows. There we can see we get tagged in. Takes a bit of time as it's the 4-hour time frame, and bang, there you can see our TP is hit. When you're trading market structure, liquidity and supply and demand, it's the same pattern on every single time frame. We follow structure, we look for the demand or supply responsible for breaking structure, liquidity to be above a demand zone or below a supply zone. We tap into here, we enter, we target the higher high in an uptrend, or we just target the lower low in a downtrend. Okay, this pattern happens in every single time frame. So I just showed you the 4-hour, now the 15-minute time frame. So it's the same steps as before. We look for a break of structure to the upside. Here we have it here. Now we want to look at the demand responsible for breaking the structure, and it is this demand level here. It is not this demand because can you see we took out the high, although it was just the wick, then came down and bounced. So this isn't responsible for breaking it. This demand is here, and we can see now this becomes liquidity, where a lot of people have incorrectly put their demand, and we can stop them out before taking our position. So I will enter just under this liquidity in this demand zone, stop loss slightly below, and again I'll just target this higher high, giving me a nice almost 1 to 3 risk to reward. Play that out, get tagged in, takes a bit of time, but we just let it play out, and bang, TP is smashed again, just following the exact same steps. And if you still don't believe me, now I'll show you it on the 15-second time frame. Okay, this is the same chart, it's from today, and guess what, we're going to do the exact same thing. So we get a break of structure, but in this scenario it's actually to the downside. Now we have this protected high, this is our structure, and we have this low. So we're expecting price to respect this high and take out this low. Where can we reject from? We have this beautiful area of supply. Now we are building liquidity here, and as we push up higher, we're building more liquidity here. Right, all these swing highs are liquidity, perfect. However, I would not just sell here in this supply zone, target this, stop loss above here. It's way too high. So what do you do in this situation? Simple. I'll just look to enter at 50% of the zone, stop loss above here, and now I've turned that into a lovely 1 to 2.7 R. Okay, we'll play that out. See, all this is liquidity being built. You get filled in and smash, you hit take profit, and that was literally from a couple of minutes ago today. So it's super simple. If you want to see my full trading strategy and watch me live stream every single day, then make sure you click the link below. Thank you for watching, and I'll catch you in the next video.